For years, I've helped people and personally invested in real estate the traditional way, basically finding an older property, fix it up, rent it out, refinance, rinse and repeat, basically BRRRRs and flips. But lately, something interesting is happening in the investing world. We're seeing more and more people, especially seasoned investors, building their rentals from scratch. It's called the build to rent, or BTR. And while it used to be a strategy only big developers used, it's now available, even smart, for small investors too. Today, I'm breaking down what build to rent investing actually is, why some are shifting away from fixer-uppers, and how the numbers, tax benefits, and long-term strategy stack up. So let's start with the obvious question. Why would you build a property when you could just buy one already built? And that's a great question. Here's what experienced investors are realizing. Older properties come with hidden costs, electrical issues, plumbing surprises, foundation fixes, deferred maintenance over the years. And these aren't just headaches, they're time killers and cash eaters. And on top of that, older properties often attract lower quality tenants, which leads to high turnover, more repairs, more management stress. Now compare that to a brand new rental. Everything's under warranty, no major repairs for 5 to 10 years, higher rents, lower turnover, and you attract a different caliber of tenant. It's not about flipping or building to sell. It's about building for cash flow from day one. So what is build to rent? At its core, it means you're buying land, building a rental property, and holding it, just like you would with a BRRRR. But instead of starting with a 1960s fixer-upper, you're starting with a brand new product. And this could be a single-family home, a duplex, a fourplex, even a small cluster of townhomes. Some investors are working with spec builders. Others are hiring a GC and building from the ground up. And you get to customize it for rental use from the beginning, using durable finishes, energy efficient systems, floor plans optimized for rental income. So now let's talk numbers, because that's where things get interesting. Let's say you buy a rental property today for $350,000. It might rent for $2,200 a month, but you're dealing with older systems, higher insurance, and repairs every year. And then now let's say you build that same type of property for $300,000 all in, land, labor, materials. You're in at less than market value, and it rents for $2,500 a month because it's new. You're going to get better tenants, lower maintenance, and bonus depreciation on year one. Huge tax write-off. Plus, if you hold it, maybe refinance it in a year or two when rates come down, or if they come down, you're able to pull cash out and still have equity. That's the BRRRR method, with no renovation surprises. Here's the basic process a lot of investors are following with this. 1, buy land in growth markets. Look for path of progress areas where development is heading. Zoning is key. You want something already approved for residential use. 2, partner with a builder, either custom builder or spec builder. Lock in your price before breaking ground. 3, secure construction financing. Yes, you can finance the build, often with only 10 to 20% down if you qualify. And I'll link a video here that talks about some of the financing options for this. 4, build for rentals, not retail. Focus on layouts, durability, and efficiency. This isn't about resale. Then 5, lease it up, then refinance. Once it's rented, you refinance into a long-term hold loan, either DSCR or conventional financing, and that's basically the full cycle. It's a BRRRR, but built for the future. I have a full real estate investing playbook that breaks all this stuff down, financing options, all that. And I'll drop a link to it in the description here. So why is this strategy getting traction now? Simple. Inventory is low, interest rates are high, investors are getting tired of bidding wars, repairs, and competition. And with build to rent, you control the asset from day one. No bidding, no surprise leaks, no tenants inherited. You build wealth by building real assets. And as rents rise, but resale inventory stays tight, the strategy becomes more attractive, not less. So look, this isn't for everyone. It takes planning. It takes the right team. But if you're serious about long-term wealth, build to rent is a strategy worth understanding. And again, if you want a full free walkthrough, check the description here where I'll link a copy to my playbook on it all. And I'll link some videos throughout this to some other content I have that explains this a little bit further. Thanks for watching. Make sure to hit that like and subscribe, and I'll see you in the next one.